share button now, so I can share from my end. So I'll just share.
Okay, yes, it's going to be recorded live on YouTube. Yeah, on our page.
Okay, right. Thank you. So I'm not able to share from here. So I don't know if the host can. I have the button, but it says sharing is not turned on. So I don't know if you could help us from there. I'm still not able to share my screen.
Yeah, we'll start it out. You're able to now.
Okay, I have it now. I have it now. Thank you very much. So please, at any point when you can see my screen, please do let me know. All right, please do I have confirmation that we can see my screen?
Very well, sir.
Yes. All right. So thank you very much. All right, good morning once again, everyone, and thank you for the opportunity to share. As has been mentioned, this so I've been mandated by the team to take the presentation. What we want to achieve is to be able to run through our slides in about 20 minutes so that there'll be questions and opportunities for comments, and then all of the facilitators can then jointly provide answers to them, and any other person also that may be knowledgeable in that area can also speak to it. All right, in terms of those of us that have worked together, so we also have Brad John Ajibade. We brought him in also. He also is well experienced in this field, so we work together to present the slides. So this morning, what we'll be looking at is the Nigerian tax reforms 2025. We are just going to do a general overview, and then we'll focus on implications for individuals and SMEs. It's a broad topic, so we may not be able to go through everything. So what we have decided to do is just to pick areas that we feel are burning issues that everyone should be interested in. So in terms of the tax reforms that happened in 2025, there are 4 major acts that were enacted to ensure that the tax regime works as it should. The first one is the Tax Administration Act. This basically looks at how the taxes should be administered, which body collects what, how should it be paid, how should the taxes be paid, and things like that. The second one is the Nigerian Revenue Service Establishment Act. As some of us may be aware, we do not have FIRS anymore. Now we have the Nigerian Revenue Service. And this act simply talks about the expectations of this body, what it can do, what it cannot do, what powers it has over revenue. And then there's also the Joint Revenue Board Establishment Act, which repeals the before now Joint Tax Board. So the Joint Revenue Board oversees various kinds of taxes, and then gives the guidance of what kinds of taxes to be collected. The one where we have the bulk of the interesting issues is under the Nigerian Tax Act. So this spells out in detail many of the provisions and expectations for Nigerians, particularly as it relates to the Tax Act. So in summary of these reforms, what we have seen that the government is trying to do is to consolidate multiple tax laws and also to make the rules clearer. There were a number of things that were not clear in the tax laws, things around exemptions, things around definition of terms, those things that accountants typically use to make a loophole in the system. Some of those things have been addressed, and this tax now conforms better with the international best practice. Now, some of the myths around the new tax laws. So there are a number of things that we have seen on social media. For example, people have said that every banking flow will be taxed. As soon as money comes into your account, the government will take those monies. That is not true. The only incomes that are taxable are those kinds of incomes that the Tax Act have specified as taxable income. Things like business profits, salaries, rent, investments, and so on. So, but not just anything that comes into your account. Also, some persons have said that government can automatically debit your account for tax. That is not true. No government authority will just go into your account to withdraw your money. As a matter of fact, before you can actually pay taxes, you must actually do some kind of filing with the government authorities. So no government is just going to go into your account to debit your position. Then some persons have said that small businesses are going to suffer under this tax regime. The government just wants to collect money from people. That's also not true. In fact, what we have seen from these tax reforms is that the government is favoring small businesses. We'll mention some things along the lines in this session as we proceed. Also, another school of thought says that to escape whatever government is planning, just put narrations and say things like family support gift that somebody dash me or something. I don't know. Those things are not those narrations do not hold any weight when the tax officials come. So, for example, somebody has a business has received gifts of 100 million or grants of 100 million, and then you just write gift there. That is not going to be tenable. The tax official will still do his due diligence to find out if that is the case. Now, in terms of the benefits of the reforms, so some of the quick benefits that we have seen from the reforms, number one is that these tax reforms protects the low-income earners. So, for example, anybody that earns 800,000 or less annually is fully exempted from tax. Such a person will not pay the PIT at all. So that's people around the minimum wage, they will not be taxed at all. Before now, everybody within the system, civil servants, anybody that earns the minimum wage was being taxed. But if you earn 800, if anyone earns 800,000 or less, such person is exempted from tax. Then also we have incentives and reliefs. There are new incentives like rent relief, which we'll still talk about in some slides ahead. Then we have something that is called compensation for job loss. So, for example, under the whole tax law, if somebody is laid off his work and he gets a severance pay, the only thing that the only exemption he can get is up to 10 million naira. But now this has been increased to up to 50 million naira. So if the severance pay is say 49 million, for example, it doesn't pay any tax, capital gains tax on that. So other benefits, lower cost of essential goods. We'll mention certain things around this in the following slides. Then also this tax is pro-growth, meaning that everyone that have reviewed these tax laws from a positive mindset, I've seen that actually this is supposed to boost the economy, domestic economy, and also try to bring in more investment for the nation. So we'll just go straight into some of the provisions of this new tax law and what it means for us. So number one, definition of a Nigerian company. So before now, a Nigerian company was not really clear what it was, so people could be overseas doing substantial business in Nigeria and they will not be paying anything in taxes. So, but now the law has already come out to say clearly what it is. So, for example, even if your company is not domiciled in Nigeria and you have a central operating place within Nigeria, you are now liable to taxes. So that regime of saying that my head office is in Accra, Ghana, and then you are doing substantial business in Nigeria is over. So that is one of the provisions. Also, there's the introduction of the development levy. So just to cut this short, This is just 4%. Before now, what we had was a multiplicity of different taxes, education tax, technology tax, and all that. So what this act has done is just combine all of the various levies together under what is now called the development levy. So this will be good news for accountants. It just gives just one place to impute all your figures. Now, in this next point is very important: minimum effective tax rate. Now, the government is saying that the minimum effective tax rate is 15%, provided you generate a revenue of at least 20 billion. So, for example, if you have a company or you work for an organization that the annual revenue is about 20 billion or above, that means that regardless of whatever your computations are from your accountant, you will still pay 15% of your profit. So, meaning that, because like I mentioned before, there were a lot of loopholes in the system before that the accountants can take charge of to avoid taxes. So one of the provisions now is that if your company earns 20 billion and above, you have to pay 15% of your profit, regardless of however your accountant has done his computation. Then this one will be good news for business owners: input VAT recovery. So currently today, one of the myths also that I didn't mention, many people said that the VAT rate increased. This was debated a long time for some months last year. But as we have seen, the VAT rate is actually retained at 7.5%. And another advantage of this is that there's now the input tax VAT recovery. What that means is that if you are offering a service, for example, and on the service you are offering, you have paid VAT. For example, you bought some equipment, and on your teller on your invoice you have VAT 7.5% on that equipment. When you sell the product for which you acquire that equipment from, you also charge VAT. What the government is saying that compare the value of the input tax and the output tax and get the difference. So you will not just be paying to the government 100% of the VAT that you have added to your invoice. Basically, what you'll be looking at is how much VAT did I pay and how much to render the service and how much tax VAT am I asking the people to pay. So your accountant will do a balancing. What the government wants to achieve there is that government wants to reduce the effective tax that you'll be paying on that. By doing that math, your VAT you are paying to the government actually reduces. So that's also a good one, because it means that the prices of goods will also drop. Now, this slide is very important. I like all of us to look at it. So one of the things that the government has said, and this is a deliberate plan to try to bring down the prices of goods and services. So all of us know, or many people thought that taxes is just all about increasing, it will lead to inflation. Those are some of the things that people had said. But one of the things that this government has done is to now look at a way, even within the tax system, to try to bring down the price of goods and services. So for items that are VATable, the government has now said remove all essential goods and services. So these are some of the areas that if you buy any of these things and somebody imputes tax on it, you should contest it. So for example, food items, anything that is food, you bought anything food, you go to a supermarket, you buy sweet, you buy biscuit, you buy whatever, anything edible, you shouldn't pay VAT on it. Or medical supplies is VAT is exempt. Educational books and materials, you shouldn't pay VAT on it. Anything electricity generation and transmission, that also is not VATable. The medical equipment and services, if you are paying school fees or any kind of tuition fees, VAT should not be included on it. And then if you are doing any kind of export business, VAT should not be included on it. So that, I think that's very good from the government. So this also is just to help the prices of things to go down. Now, another provision here is the use of taxpayer ID and tax identification number. So government now has even come out to say that individuals must even have a tax ID. So before now, what everybody was used to is that if you are a business, you must have a TIN. But government is saying that even individuals now must have a federal government tax ID. For those of us that are in various states, you may have currently some kind of ID from your state, but at the federal level, all of us should have this. Now there's a URL here we can share after now. All you just need to do is input your NIN, and then the system automatically generates your tax ID for you. Those of us that are business owners, your employees also should do this, because this will be the basis for which you'll be paying their PIT. I mentioned that personal income tax, anyone that earns 800,000 and below will not be charged tax. So I will talk more about that in some other slides. Then mandatory invoicing. This is essentially for business owner. So this is the closest that you can say to government actually knowing what you are doing real time in terms of your finances and in terms of your administration of your invoicing. So the government, by the reason of the new act, has come up with something that is called mandatory invoicing. What that means that you'll be integrating your ERP to the Nigerian Revenue Service platform. So there are provisions that have been made. So particularly it is in phases. This is going to happen for all businesses, but the phase that is currently active is for any business that earns 5 billion naira revenue annually and above. So if your business has a revenue of more than 5 billion naira, by now you should have been talking to somebody that will integrate your ERP to the Nigerian Revenue Service. If you have not done that, please quickly do that, especially if your company earns a revenue of above 5 million annually, because if you don't do it, by the end of March, there'll be sanctions for that, and it will not be good for you to be paying sanctions for something you can avoid. There's also an update on the VAT sharing formula. This new tax law, again, has reduced the VAT liable to the VAT collection rate for the federal government to 10%. So the government is saying that we want more people to be able to use, more states to be able to use their resources. So what this federal government has done is to increase the portion of the VAT allocation that goes to the state and local government. So what that means again is that, particularly for those of us that are Christians, we know that there is more money in the states now. There's more money at the local government. So by extension, if just to speak politics, we will say that nobody should look away from politics again. Nobody should look away from administration of local government. There is more money in those places now for them to actually do the things that they ought to do. Then also increase in penalties. I mentioned this. So if you have not, if you don't file your returns by the first month, 100,000, and for every additional month that you default, 50,000. So if you have a business, this is somewhere that your accountant should be looking at. They should file their returns, monthly returns, as at the time when they should be doing that. So I think that is very important. Then broader definition of chargeable income. The government defined what chargeable income is. I need to move because of the time so that we can take questions. I've mentioned that the tax is progressive. Let me jump to rent relief. In terms of the new provision in the Tax Act, so the government has also come up with something that will try to beat down the amount people are paying in taxes. We have seen that in several places in this new tax administration. Government wants to actually reduce tax that lower income earners are paying. So what government has done again is to say that there is a rent relief capped at 500,000 or 20% of your annual rent. Now, one of the misconceptions I've seen about this that people have said, everybody keeps going around to say that government, your tax relief is 500,000. That is not true. Your rent relief is actually 20% of your annual rent, or 500,000, whichever is lower. So it means if your rent is 1.2 million, I'll show that you cannot have rent relief of 500,000. So 500,000 or 20% of your annual rent relief, whichever is lower. Another thing that I need to say here is that some persons have, the provision of the law is that only the name on the receipt is liable to collect the relief. So if Mr. Adeboale presents his tax relief, Mrs. Adeboale can also present the same tax, that same rent, to say that this is my tax. I want to use this for relief. So that means we'll be cheating the government. So Mr. and Mrs. cannot work. One person has to make the payment, and whoever makes the payment is the person that enjoys the rent relief. Now, this is just putting side by side the old tax laws in PIT and the new one. So if you look at the column to the left, this was the old tax law. Everybody, regardless of whatever scale you are, you pay tax of at least 7%. But on this new tax law, if you are earning 800,000 and below, you pay zero tax. Then it now progresses. So if you look at, I'll go to the last line. If you look at the last line, the old tax actually favors those that are rich. You know, if you look at, if you earn three, or well, the old tax actually taxes everybody. Once you earn 3.2 million, your tax is 24%. But that 3.2 million falls at 15% under the new tax. So for example, if you are earning maybe 25%, 25 million per annum, you still pay less than what somebody that was earning 3.2 million under the old tax was earning. So basically, government is trying to reduce the taxes to the barest minimum. The only people that take the hit, heavy hit under this new tax law, is anybody that earns 50 million and above annually. And you agree with me, anybody that earns 50 million annually and above should actually pay good tax. So we did a small computation, the team did a small computation around taxes and PIT calculation here. So this hypothetical scenario is somebody that earns 700,000 a month and then 8.4 million annually. So basically, this is how the tax will be calculated. So it's gross annual salary, 8.4 million. The eligible deductions, pension 8%. That's the calculation is there, 672,000. Then if the person has mortgage, so let me just say this particularly to our older brethren, you know, and to all of us really, mortgage is going to bring down your taxes. So feel free to take mortgages. If this person had a mortgage, that mortgage interest is tax exempt. So it helps him to beat down his taxes, but this person doesn't have any. So that's why he have 0 here. Then there's also the NHIS. This is not static, depending on your HMO. So the more you pay to your HMO, the more tax relief you also enjoy. So we are encouraged to use our money well. Then also the National Housing Fund. This is optional, but if you have it, it will also reduce your tax liability. Then if you look at the last line, just like I mentioned, we assume that this person is paying rent of 1.2 million. Based on the calculation of 1.2 million, you see that the amount of tax or rent relief that is able to enjoy is just 240,000, not 500,000 as the case like every other person thought, because some persons have argued with their accountants to say government said I have 500,000. That's not true. What government said is you have 20% of your annual rent. So this is just a summary of the tax table for that. Based on the calculation we have done, this person will be paying tax of 480, will be taking home 486,130. So based on the computation, we can play around the numbers with the reliefs, with the deductions. The more deductions you have, the more you are likely to take home more money. So let's just look at that. Then let me explain something about the tax table up. So based on this man's earning, you see that the highest rate that he has to pay is 18%, and it's even progressive. So it's not just paying 18% on his entire earnings. The system has graduated it. On the first 800,000 that he earned, there's no tax at all. Then on the second 2.2 million is charged 15%. Then the balance that we have is just, I think I've mixed up the figures some way. So, but basically what we wanted to explain here is okay, yeah, I'm still in line. So basically, if you look at the percentages at the end, so 15% times 2.2 million, which is the rate at which it is, it gives us this balance. Then 18% of the balance on the line million will give us 694. So it's just basically graduating the taxes. So it's not being slammed 18% on its total earnings. So it's being graduated as it goes. All right. I think this should be the final slide before we take questions and comments. Now, small business considerations. All of these things that we have said, one of the benefits that we highlighted at the beginning is that the government wants to encourage small businesses to thrive. How is this going to happen? I think everyone that has a small business should look at this slide and pay attention to it. So what the government has said is that for everyone that has a small business, and by definition, A small business is any business that has an annual turnover of 50 million and below. So when you calculate your entire revenue for the year, if you have not made up to 50 million naira, then and your assets do not exceed 250 million, meaning that when we calculated the cost of your building, the cost of your motor vehicle, the cost of your equipment, maybe you have a printing firm, for example, the cost of your printers and all of those things. When we calculate everything, your assets do not exceed 250 million. And when we look at your revenue for the year, you earned less than 50 million. The government is saying such companies should not pay tax, company income tax at all. And I think that's very beautiful. So if you have a small business that earns a revenue of less than 50 million, you will not pay any tax, company income tax at all, except if you are into professional services. So people like us, accountants, we have an accounting firm, you have a legal a consulting firm, you have a medical consultancy firm. All of those people into professional services will still be tax liable, because again, there's no way to quantify how you render the service. For example, the richer the person that comes to you, well, in most cases, the more you are likely to charge the person. So there is no hard and fast rule around consulting. So, but product or services are easy to judge. Now, while everyone is small businesses are tax exempt, there are certain things that they still need to do. Number one, they must have that identification number that I mentioned before. So as a business, you must register, have a team, and then your employees also must register, have the tax ID. Then number two is that you must file annual returns consistently. Even if what your liability is zero, you are not paying any taxes, you still file the returns. Then finally, you have to keep proper tax record for at least 6 years. So I encourage you, if you have a small business, even if you have not been fully working, or maybe for one reason or the other, you have not kept proper books, please get an accountant that will review all of your bank statements and then put together a small financial accounting position for your organization for the past 6 years. And then at any time when the tax officials come or you do your filing, you are on the good side of the law. So this is our presentation. The team will be on standby to answer all of the questions. My colleagues are on the call. So if there are questions or comments or clarity that we would like to have, the team will be on standby to respond. So we'll hand over back to the moderator to guide us on how that would go. Thank you very much.
Thank you very much, Brashel, and the team of facilitators. Thank you, everyone. We're very grateful. That's a very beautiful and succinct presentation. So we don't have to waste time. If we have questions right now, it's fine to have show of hands, and I can pick one after the other. And if in the alternative, you prefer to just put your question in writing, you can put them in the chat and I will read them out. So show of hands, if we have questions, clarifications on any specific point, that's why we're having this session. Our facilitators are ready. Okay, I see Bro Abayomi. Yes, you have the floor.
All right. Good morning, everyone, and for those in diaspora, good morning too. So it's a very good presentation from the show. However, as much as I have other questions, but I just want to bring this up because it's been something that other persons have asked. Now, when it comes to some individual taxes and for corporate entities, now we have companies that are limited liability companies and those that register their entities as a business name. Now, from your experience and from what you've presented now, how does the tax affect an entity that is registered as a business name now compared to those registered as a limited liability company? What are the tax implications, or what are the benefits an entity as a limited liability companies would enjoy that would not readily be available to those registered as a business name. I don't know if that question is clear, but that's the question.
Okay, I think it's clear. So how do you want to do it? Do you want to take all the questions then?
No. I think you should just take this. I presume other persons will speak my mind on the other questions. Let me give other people opportunity to ask questions too.
Brother Tokwe, we can't hear you, although I know you are speaking.
Yeah, at present, we have received only Bayomi's question, so I think we can proceed to address that and then see if other questions come up.
Oh, okay, thank you very much. So I don't know if any of the panelists will want to take that, or I should just go ahead.
Good morning, everyone.
Good morning,
Good
sir.
morning,
Hope
sir.
I'm
We can hear you. Yes.
Very well,
All
sir.
right. So this is Mayowa at DME. So Broshin, well done for the presentation. So quickly to the question. We'll start from the difference or dichotomy between a limited company and a company registered as a business name. In law, when you have a limited liability company, the company itself is a separate entity different from the owners of the company. But when you have sole proprietorship, just ordinary name registered, the owner and the business are seen as same. The only difference is that the person has taken a step to register that name so that someone else will not, pick that name. So what are the benefits? The benefits in the current tax law are those exemptions that were given in terms of turnover. That if your turnover, is less than, I think, 20 million or something, you don't pay tax, you don't pay VAT, you don't pay, company income taxes, and all those taxes might not be applicable to you. However, it is expected that you register your business name with the JTB, with the tax, with NRS, that's Nigerian Revenue Service, and obtain a tax identification number. The dichotomy around this is that sometimes the law says, okay, if your turnover is up to 20 million, you're exempted from taxes. But as a business owner, as you grow and your businesses improves, which is what the prayer we're praying, you cross that threshold. You'll be doing maybe 30 million in terms of annual turnover. And then if you're not careful, you may have forgotten that, because I am between this particular threshold, I was exempted from taxes. Now I need to start paying taxes. I need to start remitting VAT. I need to start charging VAT. I need to start making all those things. So the benefit there is that you wouldn't pay as a registered business name. You won't pay all the taxes as long as you are doing your turnover is below the threshold that was given. As long as your threshold, the annual turnover you are doing is below those thresholds, you are exempted from paying all of those taxes. But you as the owner, you are not a salary earner. You don't earn salary monthly, except if you want to put yourself on under salary in your business. But if you are not doing that, at the end of the year, you are expected to do what is called annual filing with the relevant tax authority that, in this year, I am an entrepreneur, I have made XYZ amount, this is what my profit is, and you will now be subjected to pay, we call it direct assessment in tax. And the computation that Broshin was highlighted in the slide, that if you earn, less than 800,000, you won't pay any taxes. If you earn between this and this, the is graduated, you will pay this. So that's your income for that year will now come under that computation. It will arrive at your taxes, and then you will pay, and then they will give you a tax clearance certificate. So that is some of the benefits you derive if you don't have a limited liability companies yet. However, the limitation there is that there are some contracts that you will want to bid for or you are interested in. They will tell you that, sorry, if you don't have a limited liability company, sorry, you cannot bid for this business. Okay, so it's just for you to look at, okay, where am I going? Where am I currently as a business? Where do I see myself as a business? What do I need to do as a business? So in all of this conversation, it's good to carry the accountant or the tax consultant along so that it can properly guide, along the way as, the business is growing. So that's just my quick take on all of this. Thank you.
Thank you, sir. Thank you, sir. Do we have any other questions by show of hands? Oh, yes, Bro Samuel.
There's also a question in the chat room.
Yes, yes.
I will read out.
Hello, sir.
Okay, so you can take that.
Yes, Bro Samuel, yes.
Good morning, sir. Good morning to everyone. Thank you, Brashon, for the presentation. I have a question, and it's on rent relief. I noticed 20% rent relief stated as due to any taxpayer or any salary earner. When will this rent relief be disbursed to the individual? I want to know. Is it after presenting the receipts, and how fast, like under how many months will it be disbursed? Thank you.
All right.
Okay.
Okay.
Yes, sir. Okay, sir.
Yeah. No, I was just going to say that the question is well received. So I think my own bit of it is so any of the panelists can pick it up also.
Okay, thank you, Brashon. On the issue of rent relief in itself is not paid to an individual. The rent relief is not paid to an individual. Rather, it is applied. There's something we call tax credit. So when they want to compute your annual pay as you have, as in the taxes you are supposed to pay remit to the government on a monthly basis. So they will give you that relief. That relief is like a what you call in business discount, kind of, or a reduction. So instead of paying, let's say, 10,000 naira as tax, so they will say, okay, the rent relief portion is 1,000. So instead of paying 10,000, so you will now pay 9,000, having deducted the 1,000 naira tax relief. So that's exactly how it works. Those are just, like I said, their reliefs are just like discount that the government gives to taxpayer to ease their burden, to ease the burden of taxes on them. And like we have earlier said, 20% or 500,000 naira, 20% of your gross pay, or 500,000, whichever one is lower. So let's assume that you are taking 500,000. So that means that if you are supposed to pay 8 million naira to the government, so they will deduct 500,000 from it. So it now becomes, what you can now pay tax on will now be 7.5 million. So it is that 7.5 million they will allocate based on the table. The first 10%, the first 800,000, maybe 3%. The next 2 million naira, 10%. The next 5 million naira, this percent, based on the table. So that's how it works. It's not given to an individual, rather is used to reduce the amount of taxes you are supposed to pay to the government. And there is a tax calculator online if you know your income, monthly income, just key it in. It will automatically calculate all these things for you and show you how much you should pay as taxes on a monthly basis. And if you multiply that by 12, that is what goes to the government. Oh, that is clear.
Thank you, Mr. Mayowa. Maybe not so clear. I want to know how it will affect a salary earner. Yeah, I understand your explanation, right? It's at the long run, it reduces the tax you're supposed to pay to the government. Now, how will it affect me as an individual, as a salary earner?
Okay. If I may come in, my name is Adibade John Kayode. So, Brother Samuel, from what Brother Mayowa has explained, so if your chargeable income, annual chargeable income, let's assume it's 10 million, this computation.
Sorry, I think your volume is low. You may please help
Yes,
us.
it is low. I can't hear you.
Okay. Can you hear me well now? So as I was saying, I said if your chargeable income is let's say 10 million, so using this table here, you're just supposed to apply the 10 million on this table by your right. But because you have something that is supposed to be deducted from that 10 million, assuming it is 1 million or 500,000, which is the highest that the government has made provision for a year, if you reduce it to 9.5 million, then the calculation for your payee will be done on 9.5 million. So the government has given you like a soft landing just to make you pay lower because you're paying rent. So let's assume that maybe it's your wife and she's not the one paying the rent. Like Brashew has explained that two people cannot use one rent receipt. So you will enjoy that relief, but she will not enjoy that relief. She would likely pay the exact amount you're supposed to pay, while you will pay something lower because you are paying rent, your annual rent, which is assumed to be, let's say, 500,000. So I think a relief is just something that just reduce what is supposed to be paid, like a discount, as you have said. So that's what you just enjoy. But for somebody who doesn't pay rent, will not enjoy that relief.
Very well. Thank you, sir. Yeah. Okay. Thank you, Bro Kayode. Okay, so we before I go to Sister Onyekon, so we have a question that has been in the chat for a while. I'll read it out, then we'll take Sister Onyekon's question, and then we can have both questions answered in succession. So the question in the chat is, what happens to a business that was registered for a while, but has yet to go into operations and has never filed annual returns? So how are there any implications under the new tax regime, or is there anything there for a business that has been registered, never operated, and has never filed annual returns? Okay, so that's that question. So we'll take Sister Onyekon's question, and then our facilitators can answer both questions. Over to you.
Thank you, Bro Tokwe. Thank you, Bro Sheo and Bro Mayo. First, I want to speak to the question asked by Bro Samuel, and I still don't think that the answer is clear enough. I think what he wants to know, which I also want to know, is how does it impact my net income, my monthly net income? So does it mean that now that that relief is available to me, there will be an increase in my net income since there will be no deduction? Right, that is like, I don't know if I'm speaking Bro Samuel's Bible, but that is how I would love the question.
Exactly what I just dropped in the chat now. Yes, ma'am, you are speaking in my mind.
All right, sir. Thank you very much. Now, the second question is for that person who is not entitled to rent relief, for example. I think I have one, he has not answered me. Now, why are we now suddenly seeing deduction in our monthly net income? Is it the fact that once you are not entitled to rent relief, then there has to be a deduction in your own monthly net take home. Thank you.
Okay, so let me try to start with the two questions, and then my colleagues also will just help out. So on the first one, where there was a question around if you have not been filing, well, so technically, what the first and most important thing is that the person automatically is liable to administrative penalties. So because based on the law, even the old tax law and the new ones, the moment you have a company, you are supposed to be filing your taxes, whether or not you make any profit, whether or not you have any transaction, just file, just do the filing. What that helps the government to do is the government helps, it shows your commitment as a good citizen. So, but having said that, there are also provisions to say that there are certain businesses that have been incorporated and there is no evidence of any activity. So, for example, if you have bank statements, the bank statements are blank. There's no record anywhere that you have received money, for transactions into that organization. So the tax officials can now, based on their own assessment, classify that account as dormant, and then progress on that. But in most cases, what is typically advised is that now that if there's anyone in such a scenario, after this tax meeting or this tax conference, put together your books, put together your accounts, and then present yourself for self-assessment. So basically what that will do for you is that there is a lot of compliance in the system now. Everybody has this new tax law to say, oh, I didn't know, I'm just getting to know about it. So the government would typically do a calculation, and then you can now have a conversation with whoever the tax officials are. So, but it is best going forward to quickly put your documents together and then begin to file your returns. So, because by not doing that, you are missing out on some benefits, tax clearance, you can't get some contracts and things like that. So I think that's that. Then my colleagues will still shed more light on it. The other one is about the issue of the rent relief. So I'm sure that many people, what everybody thought when we mentioned rent relief is that everybody hoped to see significant increase in their take home. So that is what everybody wants to see. But you need to also know that the computation is annual. So meaning that, for example, you have 20% on your rent, whatever your rent is, you compute 20%, and that 20% is graduated or shared monthly. So, for example, in the case of the presentation that we did, right? So this man has
240.
I'm trying to get back to the slide. So this man has a rent relief of 240,000. So it doesn't mean that every month you'll be seeing 240,000 reduction in his increase in his income. So this amount is still going to be graduated to a monthly basis. So it means that you now also have other deductions that take place and other allowances that you have enjoyed. So it means you need to look at holistically your pay slip to be able to determine. So it's not just the rent relief that has impact on your earnings. Other parameters also have effect on your earnings also, and then you also need to look at that tax computation. Some organizations before now were not even remitting correctly. So I'm sure that by the beginning of this year, many of the accountants in some organizations have gone to look at their pay slip calculations properly. So you discover that certain persons that expected to be earning more discover that they are now earning less because the accountant wasn't doing what was supposed to be done before. So you need to look at your pay slip and then try to also put your earnings on the calculator, the federal government tax calculator that probably will be able to share after this session. So I think those are my thoughts. My colleagues can please add to it.
All right. Thank you, Brosho. So the little take I'll add to it is this. like you rightly said, the rent relief and some rent is not the only relief you have under the tax law. If you are contributing to Nigerian Health Insurance Authority scheme, that amount you pay, the premium annually, is also a relief. They will deduct it from the total chargeable income that is supposed to be assessed to tax. They will deduct that NHI payments that you make. If you have life insurance too, so the premium you pay annually, they will deduct it also before they now arrive at the net chargeable income, which will now be where the applicable tax rate will now be applied. So rent is not the only relief that is granted under the law. Like I said, NHI, if you make payment, pension contribution is also a relief. So they will calculate all these things on an annual basis and then deduct it from your, let's just say maybe your gross income now, to now have how much is now available to be taxed. And that's what's called your chargeable income. So you may not really feel, so much impact like that on a month by month basis on each of the headers. You may not really feel it. But one beautiful thing about this new tax law is that it's empowering, it's giving additional income to salary earners or to taxpayers. How do I mean? Early this year, by the time we're moving to the new tax law, I was discussing with my tax consultant in my office that please, based on the new tax law, please recompute my taxes and let me see how much I'm going to pay. And true to the provisions of the law, I saw that my salary increased by about 20K. He did the computation and sent it to me. I went online, put in all the figures I know. We did not at first arrive at the same figure. But when they now shared this computation, I looked at it, I validated it that this is correct. And I saw that there was an increment in my salary by about 20K. And we also did that for all the staff in my organization, the lower level staff, after the salary was paid, somebody called me and said, I saw an increment of 7,000 naira. I was just laughing. What was that? It was because of the tax law. The tax law did it in such a way that instead of paying higher percentage cumulatively, unlike the old law, under this new law, cumulatively now, you pay lesser amount. So there should be that if you have been paying 100% taxes, pay as you earn taxes on a monthly basis before now, after this law has been implemented, you should see, maybe not so significant, maybe 5,000, 2,000, 3,000, like that. Even if it's 1,000 naira increment on your salary. Why? Because the basis of computation, the allowance, the relief has now, slightly increased. So therefore, you should have at least a little increase, even if it's 1,000, like that, on your salary. The only people that may not see any increase are those people earning maybe 50 million naira and above on a monthly basis. So those ones are heavily taxed based on the new tax law because it is progressive. So as you're earning more, you're also paying more. That's the way it's structured. So when our sister mentioned that, they saw a salary reduction, well, I wouldn't know the reason for that. You may want to talk to your accountant or, your people, your payroll team to understand why there was a reduction in your pay. Ideally, based on the new tax law fully implemented, you should have at least, even if it's a marginal increase, in your monthly income. Monthly salary. So thank you.
Yeah, thank you, sirs. Thank you. I hope that offers.
Sorry, excuse me. Sorry, I've got a question, and I'm very, very sorry because I joined
Yes, ma'am.
late. I joined late, but I've added my question to the chat. What about those of us that are abroad? We do earn a small amount from rental income, but it's not up to taxable income. Do we still need to file a tax return? I hope my question is clear.
Yes, ma'am. The question is clear. Okay, so in terms of, so when you say rent, is it as a registered business, or is it
No,
uh
not register, but I have I collect a small rent, but it's not up to the taxable income in Nigeria. So I still need to file the tax. I'm
no,
not
so
a business.
oh, okay, no, in that case is fine. So because the major thing is if it is up to that amount, then I mentioned during the presentation that there is a portal, but I'll confirm because there's a link, so it doesn't matter. You can still just put in the figures there. The system will automatically return a new value just to be on the safe side. So there is a link that has been created for self-assessment. It's once in a year anyway. So at the end of the year, you just impute the total amounts. And also it will be helpful to also consider some other businesses that you have apart from the rent. So it's not just this, every other thing that probably you have done with Nigeria that involves income. So you just merge everything together and put it on the link. The system will be able to graduate it based on this tax scale, and then give you the computation for your income. And just to clarify, I hope you are not speaking to the tax
Well, let
relief,
me just clarify.
the rent relief.
What I meant is I just wanted to be sure. So let's say I don't have any other business in Nigeria and I do collect this rent, which is less than the taxable income. If it's in the UK, we don't need to file a tax return. But in Nigeria, and I just want to understand, do I need to fax a tax return? Let's say I collect something that is less every year, and that is the only income I collect from Nigeria. Do I need to file a tax return?
Oh, okay, I think the question is clear. Maybe I'll defer to my colleagues, but to the best of my knowledge, everything should be to be filed. It will naturally return a new value for you, but it should be. So maybe some of my colleagues can also chime in there.
I'll love Bro John to react to this, but let me give an attempt on that. Because you are the landlord of that particular property, I presume that the property is registered in your name, and if it's in a choice place like Lagos, I think you will need to file a return. And the reason for that is this: when you want to do maybe tenement rate payments and all of that, Lagos State government is very much particular about landlord of properties. When you have something to do with them, maybe you want to renew a document that relates to that property, they may ask you to present your tax, what do you call it now? A tax ID. In short, you need to present something like a tax ID or a tax certificate to show that you have been paying taxes to the government. I work with people, and they needed to. They weren't staying in Lagos like that, but they had a property in Lagos, and every year the Lagos government keep disturbing them that where's your annual return. So you need to file that to say that, okay, for now I'm resident abroad, but all the income I make in Nigeria, because this new tax law is saying that all the income you make in Nigeria should be subjected to taxes where they are applicable. So where they are not applicable, your responsibility as a citizen is to declare it. Okay, I earn so amount as as income, or maybe as rent, so to say. And I know what I need to maybe double check. There are certain portion of rent that are subject to either withholding taxes or VAT. So in that instance, so those are some of the things they want to check. That, okay, is it subject to withholding taxes? Has the withholding taxes been remitted to the government? Is it subjected to VAT? If it is, has the VAT component been remitted? But if it is not, if it doesn't qualify for either of those, they just want to see it. Okay, you make this so much from this whatever, you have declared it and it's there. So anytime they ask, go and present your tax clearance certificate. You just present those returns that you have done, maybe on an annual basis, and you show it to them and see that, okay, you have fully declared your income in Nigeria, and all of them cumulatively do not qualify to be taxed. Therefore, they can issue you a tax clearance certificate, and you can proceed to go and attend, for other uses you want to put it. So that's my quick response to that. I don't know if Bro John also has anything to, add in respect of this rental income thing.
No, sir. I think it's fine, sir.
Thank you, sir. I thought Bro Abayomi had his hand up.
Yeah, yes, I did.
Yes. Yes.
Yes, but I had to lower it because there was a little bit of what the last speaker said sort of answered part of my question. But then I just wanted to bring something very practical and to ask. For example, I and my spouse, we have a company in the US, registered in Minnesota, basically. Then we also have a sister company registered in Nigeria. Now, the point now is, the company in Nigeria has not made any income at all and all of that. So what we just basically do is that to manage overhead costs here, funds from the company in the US are sent to the Nigerian company to run its affairs, basically, even though it has not made 1 naira. So the question that was agitating my mind now is, that would be registered as income for the Nigerian company. In this kind of scenario, are those funds sort of taxable? That's the first part of my question. Then number two, there's this one that is always there's a particular form called a W2 in the US, which is like a form an employer gives to employees indicating the amounts paid, taxes, and all of that. So I just wanted to know, is there any provision in the new law that sort of give because, for example, some of these taxes can be taken from source. Say for there's this one you mentioned, personal income tax. Is it personal income? I can't remember, but I'm sure there are certain deductibles that employers can deduct from emolument, salary, and all of that from source. Idea is it does the law provide for some sort of certification that will be given to the employee to know how much of what was taken from their salary was actually remitted to the government, so that if they're making their own individual filings, those things can tally with what the employer has also filed. So I don't know if that makes sense, but that's the question that I have.
Okay, thank you very much. So let me just start from the last question. So I think I'll just speak about the last question to say that does the employer have access to confirm? So for example, those of us that are in Lagos State, for example, that have been employees that have been paying taxes, there is already a portal where the Lagos State government, the moment, so for example, if I take myself as an example, the moment my organization files my monthly payee, right? I get an email alert of the amount that my company paid on my behalf. So I can actually now confirm, and that's one of the things I also wanted to say when Sister Inko also mentioned is that you may also need to look at your pay slip from last year and also compare it with the pay slip that you have currently this year. I mentioned something to say that it may not be deliberate. Some accountants, everybody is just waking up to the realities of tax this year. So all the accountants are dotting their I's, crossing their T's. So you may also need to do that computation, particularly for those people that said their income, their net income reduced. You may need to do a comparison side by side and also try to get detailed clarification. But in terms of that question, there are you should be able to, even for your pension, right? If you have deducted pension, I have an access to my pension for the administrator page. I should be able to see it. I get the moment those payments are made, I get alerts on phone. So if that has not been enabled, that should be enabled. Several people do not know. Some of them have access, they have not reset their passwords and things like that. So I think I'll allow my colleagues to answer the first question. I can't remember what it was again now.
Okay, to refresh your memory on the first question was a parent company in the United States and another company in Nigeria. The Nigerian company has not made any money, but for funding overhead costs and all of that, money is being sent from the company in the US to Nigeria. Are those funds, which is income for, well, let me use the word income for the Nigerian company, are they subject to tax?
Okay, I think the question is clear. So I'll allow my colleagues. Ramayo, do you want to go?
Well, are they subject to tax? No, at the top of my head, but it's a bit complicated, or in a way. How do I mean? When the subsidy, I call it maybe like a subsidiary in Nigeria, when they are making their annual returns, and one, we need for the Nigerian subsidiaries, they need to have proper books of account. They need to have all documentations in place. So you need to have in place a solid accountant who is keeping track of all of these business expenses that are being made. Because if I may, from doctor's question, it's looking like the company, like I said, it is not making revenue. Therefore, we can say that it's operating at a loss. So to say, all those funds that is being sent from the parent company, ideally, under this case, should be regarded as capital. Okay. And when you have capital, there are procedures to it, because I presume that, except if I'm wrong, I presume that it's going to be in dollars or foreign currency, which needs to be translated into naira. Okay, if that is the case, there's something we call Certificate of Capital Importation, CCI, which is gotten through the banks and then through CBN to say that the parent company is investing in a Nigerian subsidiary, and all these inflows are capital to that business. Otherwise, those inflows, the tax authority will see it as income to that company. And as such, that's NRS now, formerly known as FIRS, may see it as income to the business, because typically what they do is that when you do your filing, they could tell you that, okay, upload your bank statement. And once you upload your bank statement, all the credit in it is technically regarded as your income. But if you have CCI, Certificate of Capital Importation, you can show to them that, okay, on this date we send money, it is capital. On this date we send money, it is capital, and not turnover. That way, they will be able to deduct all those money from the so-called inflow that they saw in the business account. And they can now recompute what the turnover is and align it with the audited financial statement and say, yes, truly, this company is making losses. All the inflow that came in, there was Certificate of Capital Importation to back it up. Therefore, it is treated as a capital to the business. If you don't have that documentation, CCI, from the banks and through the CBN, all those money you transfer to the to the company, to the Nigerian subsidiary, would be regarded by the Nigerian Revenue Service as inflow of income, and as such, will be added to the turnover of the business before taking away the allowable expenses and all of that, and then having a new accessible profit or chargeable profit that the company can now pay 30% on. That is if the turnover is significant and is not in the range of small businesses anymore. So that is how it works from my some of my understanding of all of this. You will need a certificate, to back up the fact that those inflow to the company are capital to the business and not an inflow or turnover and all of that. Then for the turnover part, the business that the Nigerian subsidiary needs to have a properly generated invoice to their customers, because once the annual filing is done by the Nigerian subsidiary, all the inflow, like I said, in the bank statement, the company might need to now justify it with documentation that all these are the revenue or the inflow, and these are the respective invoices issued to the customer, for those transactions or for those services or for those goods sold. So because they rely on documentation. If you can, they will just, when they are doing audit, they will just say, okay, give a document for this, give a document for this. So when they see that and you can prove that with invoices and all of that, they will accept. But where you cannot, you don't have any document to prove, like the CCI I just mentioned, and then invoices that I've just mentioned, they will take all of them as turnover for the business and then recompute your turnover and your account, which will be different from what is stated on the audited financial statement, and then you end up paying more taxes. So everything you need to do around this is just ensuring you have proper documentation, so that when you are making your filing, as you are doing your filing, you're also attaching the documentation, or when they call for desk audit, NRS or FIRS, you can have those documentation readily to present to them. So that's my take on that.
Thank you, sir. Thank you very much. Thank you very much. I don't think we have any other question. So we have the link to rewatch this session on YouTube now. It's there on YouTube. So we also have the link circulated over WhatsApp. So in case we want to spend some time to watch again. Thank you very much, everyone, for participating in this event. So this is actually a first of many that we will have. It's actually the first of many events of this kind that we the first of many events of this kind that we have in mind. So we just thought that we were going to start with this, and thank you very much to our facilitators. Sister Abiola Adetoye, I apologize to you. I got that wrong earlier, forgive me. Thank you, Brother Kayode Ajibade, thank you. Brother Mayowa, thank you very much on Brushing. We are very, very grateful. Thank you for all the work that you put into putting this together, and for how you responded to questions. Yeah, I saw. I mean, I will interact with you further and just get some clarifications about one request that somebody made, and then we'll see how to communicate that to the brethren. Thank you very much once again. So like I said, this is the first of many other events that are coming, and just to kind of give us an idea of what we're planning, we'll be talking about job search and career change conversations for those who are probably considering switching careers. That's something that is going to be coming. We're also looking at things around business proposals, investing, postgraduate studies and scholarships. We're looking at access to business capital and all of that. So we're also looking at things around personal health management and retirement planning, estate and succession planning. So we have quite a number of things coming up. And so in the coming weeks, we'll be communicating these different events, just so that we have an idea of when these events will be, and we're actually trying to connect with different facilitators. We're blessed today that we have 4 people who have helped to facilitate this session, who are all from within the Alumni Fellowship. So that's actually a really blessed one for us. And so we'll be having a lot of other people within the Alumni Fellowship who will handle different things. And we also intend to like get people from outside fellowship who will help us to handle other things that are actually outside of our reach if we can't find facilitators within the house. But the important thing is that there will be a lot of things coming up like this in the month of March. There will definitely be something. So, but we will communicate that within the next 2 weeks at least. We'll have all the information about the next program. Thank you very much, everyone. God bless us all. So I will just say a closing prayer, and then we can all say hello, hi to one another. Let us pray. God, we thank you. Thank you, Jesus, for this day. We are very grateful. Thank you for how this session has gone. Thank you for facilitators and for how they have helped us today, answered questions, made this wonderful presentation. And God, we just ask that you continue to strengthen them and you prosper them in all of their ways. And God, for everyone who has participated in this event today, we ask that as we set out for the rest of the day, for those of us in Nigeria who are starting their day, God, we ask that you preserve and protect everyone. Thank you, Holy Spirit. God, we worship you, and we ask that you continue to strengthen our fellowship, strengthen all our brethren where they are, and God, preserve everyone and keep our feet from falling. In Jesus' name, amen.
Amen.
Amen. Thank you. Thank you, everyone. Thank you very much.
Thank you, sir. Thank you, everyone.
Thank you, sir. Thank you, our facilitators.
Thank you, sir.
Good morning, Rabbi Carol.
Good morning.
All the organizers, thank you.
Thank you, Yuko.
Thank you, thank you. Thank you, Yuko. Thank you, Rabayomi. Thank you.
Thank you.
How am I losing
Thank
these
you, everyone.
names?
Thank you.
Sister, what's your name?
Thank you
Sister
very much.
Everyone, sure.
Brother Tokwe, don't echo that in again. Let me go and search for it. Sister Olaiton, I didn't even search you for saying. We again, Bro D. What's that your nickname back then when you were contesting for something in school? This was computer science, brother.
The answer.
The answer.
The answer,
Yeah,
exactly.
the answer.
The answer. Hey, Bro Shema, I greet you.
Thank you very much, sir.
Bro
Good to see
Akelo.
you. I mean,
And that my
that's a very
brother.
old name.
And that man that used to call you Akelo that refused to talk. Oh, you better under your mic now. Under your mic.
Good to see everybody again. Thank you
It's
so
good
much.
to see you. Yes.
Thank you very much,
everyone.
man.
Please, our warm greetings to the ESCOs. It's been a wonderful session. Thank you so much, everyone.
Yeah, thank you, everyone.